Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 3rd of March. I'm Daniel Lam, your host for the podcast. There is never a dull moment. This is a common expression that I've heard multiple times since Trump started his second time as US president. The gyrations on the political front is well worth digging deeper into, because it does have profound implications on the different assets. The political focus over the last couple of weeks has been the potential ceasefire between Russia and Ukraine. This was one of the key reasons why euro area equities have been performing strongly year to date. The dramatic argument between the US and Ukraine over the last few days is likely to bring volatility to global and European assets. I want to take a step back and look through the noise. Is a ceasefire really 100% positive for Europe? I would argue otherwise, actually. Well, Trump has been making noises about possibly disbanding NATO, or at the very least, make sure the US is not subsidizing for the defense of Europe against possible threats from Russia. The root cause of this is the US budget deficit. Trump is finding ways to shrink this, whether through playing attack by boosting US growth, or by playing defense by cutting expenses. And clearly, he sees subsidizing Europe in its defense as not being good use for US money. Logically, without or with less support from the US, European countries would have no choice but to increase their military spending, money that could have been used to launch fiscal stimulus for the economy. As we talked about in podcast 2 weeks ago, the German elections did not make relaxing fiscal policy rules easier, because the conservatives and the socialists together got enough seats to form a coalition with majority support in the parliament, but will need partners for the 2/3 majority required to ease Germany's strict fiscal policy rules. So therefore, the ECB will need to carry the burden in stimulating Europe via rate cuts. This is negative for the euro against the dollar. If you look at the DXY chart, it has started to bounce back from key support at 106 and the US dollar prime for positive price action. This also means that the outperformance of euro area equities is not likely to last. Is this all doom and gloom for European assets? Not so, because the downward pressure on euro area yields is positive for European government bonds. It also provides investors interesting opportunities on the European private credit space. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.